It's the solstice. I'm very much looking forward to the days getting longer again. As we approach the end of 2021, we have 2 holiday weeks left to measure. Next week, the 27th, Monday, and the following week, January 3rd, will both have holiday data incorporated. We may take next week, December 27th, off from the video. Hopefully getting some time on the snow with 3 generations of the Simonsen family. I'm Mike Simonsen, and this is this week's Altos Research Market Report. Each week, Altos tracks every home for sale in the country. We analyze all the pricing, all the supply and demand, and the changes in that data, and then we make it available to you before you can see it in the traditional channels. So it's Monday, December 20th, 2021, and here's what the market is telling us right now. The median price of all the single-family homes in the U.S. this week is $374,900. That's basically unchanged from last week, down just $100. You can see the dark red line here, the annual curve, and we have just one more dip for Christmas and New Year's before prices rise in January again. Because of the holidays, that means fewer listings, lower total inventory, and you can see the price drops too. The annual reset in home prices is most notable, though, in the lighter colored line here. That's the price of the new listings each week. So over the holidays, there are far fewer new listings, and they're priced at a discount. The fun thing to watch here is this light red line, January 10, 17, 24. Each of these weeks in January, we'll see the price spiking in anticipation of the buying in Q1 and Q2 for next year. So you can see January of this year, 2021, had this big steep climb. And that was one way we could see the home price gains for the whole year already baked into January. So if you're looking for signals, will this market keep steaming forward, or, are we in for weaker demand, maybe because the economy slows or because the rates rise? So you'll see it very quickly in the price of the new listings here in January. Super fun to keep our eye on. Even if demand suddenly weakens, though, supply is still going to start the year at record lows. There are currently only 326,000 single-family homes on the market. That's falling a few percent each week, and will continue to fall sharply in the next few weeks. As we roll into January, inventory will be under the record low we set April 30th of 2021. So even if some factor comes and knocks our housing demand train off the tracks, we're still record low supply. So if you are still in the camp, for example, who is bearish on the American consumer and think that the homes in forbearance maybe, there's still a few. If you think that those are like some inventory relief coming from those, man, I don't know what to tell you at this point. We may be finally beyond the pandemic forbearance debate. In retrospect, that program did exactly what it was supposed to do, which was to keep Americans in their homes in the face of a global pandemic. The unintended consequence, of course, is that it also prevented new buyers from having opportunities. American housing policy is often prioritizing existing homeowners over new or future homeowners. That's the way it is. That also seems unlikely to change. Here's another way to look at inventory. Each color here is a year. Above the center line means inventory is building each week. Below the line are the weeks where inventory shrank, like there's more sales than new listings. Notice how each year, 2016, 17, 18, 19, pretty rapidly after the start of the year, the spring inventory jumps onto the market. So inventory grows for the buying season, which is really the second quarter of the year. So then in the light blue here, 2020, We only had a few weeks of rising inventory before the pandemic lockdown, and then the buying frenzy just gobbled up all available inventory. 2021 was unusual. That's the green line here on the far right. That was unusual because the buying frenzy just kept up right through May. And it wasn't until the first week of May when we had any inventory climb at all this year. So here's what's unclear to me for 2022. The real question on inventory is whether market hits its low like normal in January, or whether we're in crazy mode again until April or May. So we know that demand has stayed high through the winter. We know that supply is tight. What we don't know is how quickly sellers in January will want to play into the strength, in the new year. Does the hot market pull sellers to take advantage of rising prices and big demand? Maybe if they think demand is going to weaken because, for example, rates rise. So the question is, does active inventory bottom at 300K in January or like 200K in April? Here's something to consider when thinking about that question. We know that inventory has been falling for a decade because rates have been so low. So it's been a really good time to own a home. So even when we buy our next home, we don't want to sell the first one because it's so cheap to keep holding it. So the resale inventory keeps falling for a decade. Now consider, in an inflationary economy, which we now have for the first time in 40 years, your fixed rate mortgage becomes even more attractive the longer you hold. So that implies that 2021 will face new lows in available inventory. It also means harder scenarios for first-time buyers, more competition for fewer homes to buy. Inflation could lead to even lower inventory. Something to keep in mind. So the thing to keep an eye on here is how many new listings hit the market each week in January, February. I'll bring this chart back occasionally to watch. It's going to be a wild year. As we've been trying to point out, any change in the market demand will show up very quickly in many of our stats, including the immediate sales tracker. So of the 60,000 new homes that got listed this week, 18,000 of them are already in contract. So think about what that means and what happens this spring if rates, say, haven't risen. They haven't really risen yet, but inflation has. Do immediate sales climb even higher as a percentage of all our transactions? So that sure seems where the data is pointing us right now. It's kind of scary, to be honest. But the fact is that none of the early signals seem like we're going to get any healthy supply. I'm still hoping for a slightly slower market in 2022. But we haven't seen any signs of it yet. By the way, there are just over 300,000 single-family homes on the market active this week. There are another 425,000 homes in the contract pending state right now. So the median price of those pendings are $355,000. And as we get fewer new listings and offers over the next few weeks, as the holiday weeks, the pending count will continue to tick down. In the new year, we should also be able to watch that trend and in the demand as well as the immediate sales tracker and the pendings. So we'll be able to see very quickly whether the market is adjusting hotter or cooler to latest economic changes. So much fun signal in the January data. Okay, that's all the data we have time for today. This week, we do have a fun new announcement coming from Altos Research, so be on the lookout for that. more cool stuff. Basically, to help you understand the data. If you care about the U.S. real estate market, keep your eye out on the Altos Research socials this week for our new announcement. Thank you, everybody. I hope you have a truly joy-filled holiday season with your friends and family. I appreciate you so much. Merry Christmas. More soon.